This video is a very important topic, and if you follow the steps and lessons outlined in this video, you'll definitely be making millions consistently from the markets. Every single person that wants to get into the forex market or is a beginner or struggling trader needs this video. I'm going to make sure I teach you the basics of forex trading and also how to make money from the markets. So make sure you're watching this video with your book and a pen. If you want to make money from the markets, you have to take it serious. This is a business, not a game. If you take it as a game, it will play you. But if you take it as a business, it will pay you. Alright, let's get to it. Now, what is forex trading? Forex trading is simply the buying and selling of currency pairs. I'm sure you know all the currencies: Euro, USD, GBP, JPY, and so on. So now, what do I mean by currency pairs? When I say we trade currency pairs, I mean we trade these currencies against each other. Simply put, we use analysis to know if the market is going up or is going down. If your analysis tells you that the market is going up and you take a buy trade, then you're going to make money. And if your analysis tells you that the market is going down, you take a sell trade and the market actually goes down, then you're going to make a lot of money. Sounds easy, right? This just reminds me of back in 2020. There was a guy that heard I was trading forex. I think his dad and my dad were friends, so he heard I was trading forex and he reached out to my dad that he wants to also learn, so he should connect him with me. I invited him over to the house and we talked about forex for a little while. I simplified the explanation exactly how I explained it to you guys. That was exactly how I explained it to him. The guy laughed at how easy it was to trade the forex market, and he just learned how to take trades and immediately he left my house. Do you know this guy called me 2 weeks later and he was in serious pain? I could hear it from his voice. I asked him what happened and he told me that he lost his last dollar in his savings. He has been saving up money since he entered school till that point, 2020, and he's just telling me that he lost every single penny to the markets. This is exactly what happens when you go into the markets without proper education. What I'm telling you in this video is what 99% of trading influencers won't tell you. The market is very brutal, so if you lack proper education, you're going to lose your money to the markets. I'm emphasizing on this for the folks that will just watch this video and immediately go and start risking their money. You need to get the education. Now, back to the point at hand. We make money through buying and selling of currency pairs at a particular exchange rate, and then we wait for it to get to our desired rate. Now, one good thing you need to know is that forex is the biggest financial market in the world, bigger than crypto, bigger than stocks, and bigger than others. The forex market is open 24 hours a day and 5 days a week. It's only on the weekends that the market is closed. We have 3 important sessions in the markets, which is the Asian session, the London session, and the New York session. This is when the bank open in these respective countries. London session is the UK, US session is the US, and Asian session is Japan. Now that we've gone past all of this, that takes us to the next. What is PEEP? The word PEEP is an acronym for percentage in points. It is the smallest unit of change in price. Now let me break down the concept of pips for you. Normally this is supposed to be hectic, but I just broke this down so that it will be very smooth for you. Most currency pairs got 4 decimal points, which means 1 pip is equal to 0.0001. We have exceptions like Japanese yen pairs, which have 2 decimal points, which means 1 pip is equals to 0.01. For example, Euro USD is equals to 0.0001, while USD JPY is equals to 0.01. So right now, I'll input a screenshot on the screen and I want you to focus on Euro USD. Now, you can see that Euro USD current position is 1.2124. If Euro USD moves 1 pip, then what you're going to do is add 1 pip to the original frequency. You will start calculating your script from the 4th decimal place. In Euro USD is currently 1.2124. So the 4th decimal point is 4. So if you add 1 to 4, it's going to make it 1.2125. Look carefully at the graphical representation and you're going to easily understand how this works. That's it for pips. Now, what is a broker? Forex brokers are firms that give you access to the markets. They provide traders access to the forex market by giving you a trading account. They give traders what we call leverage. Now, leverage is the ability to control higher amounts in the market with little capital. So if you're using a $1,000 account and let's say your leverage is 1:100, that means that you can trade that $1,000 account as if you're trading 100,000 US dollar accounts. But I'll be honest with you, you need to fully understand risk management before you start thinking about all of these. Now, this takes us to the next phase, which is very important: psychology. Psychology is a very important part of trading. This is because a lot of emotions go into this business. Think about it. You're looking at your money going up and coming down, so it takes a lot of emotions. So this can bring in emotions like greed and fear. Greed and fear are emotions that can make sure that you never make money from the markets. One of the important ways to manage these emotions is by making your trading strategy very mechanical. You have strict rules, you have a strict trading plan, and you stick to it no matter what. I have other hacks for this, but if I talk about everything in this video will last longer than 10 hours. But the summary is leaving your trading strategy very mechanical and not letting anything go up to chance. Sticking to your rules, working with your trading plan no matter what.
Alright guys, so this part of the video requires me to show you the charts. So what I'm going to show you is what time frames are, and I'll also show you a trade that made me about 3,500 US dollars. Now, time frames. So what are time frames? This right here that you're seeing on your screen right now are time frames. They're just the simple explanation for what it is. Every single time frame here, in the 1 minute time frame, shows that every candle in this 1 minute time frame forms 1 minute. This 3 minutes time frame, if I enter this 3 minutes time frame, it shows that every candle on this 3 minutes time frame forms 3 minutes. I go to this 15 minutes time frame, every candle, and these are candlesticks. These blue and black things that you're seeing here are all called candlesticks. So every candle that you're seeing here forms in 15 minutes. So these time frames will help a lot for your analysis, right? Because you use the higher time frames, like the weekly time frame, the daily time frame, the 4 hour time frame, the monthly time frame. You use this higher time frame to see the structure of the markets. So it will tell you where the market is going to, right? Then you use this lower time frame, like the 15 minutes, the 5 minutes, to know exactly where to enter the market and exactly where to leave the market. Here in this video, I told you guys that if you take a buy trade, if you analyze that the market is going up and you take a buy trade, then, and if the market actually goes up, you're going to make money. And if you analyze that the market is going to go down and you take a sell trade, if the market actually goes down, then you're going to make money. Now, let me show you guys a trade I took. Now, this happened on Wednesday, 26th of February, on gold. Gold is one of the most popular pairs, right? Because it's a commodity and it's also a gold and USD. So on Wednesday, I analyzed that gold was going to be bearish. Bearish means the market is going to go down. That was what my analysis would be. And I'll input screenshots of when I dropped the analysis on my free Telegram channel there. So you can check it out. The link is in the description so that you can see it live for yourself. I inputted the time when I believe gold would be going down. And you can see right here that this was where I took it from. This was where I set my stop loss. So what this stop loss means is that if things goes bad, if things go south, not really bad, this is where the trade is going to close in loss, right? While if things go my way and things go down, this is where the trade is going to close in profits. This risk to reward is called 3.5 R. Risk to reward is basically my risk to my reward. So let's say I'm risking $1,000. I'm going to make 3.5 times what I risked. So that was why I made 3,500 US dollars on one of my accounts. And I'm not even including my investors accounts and other of my small accounts that I use for flipping, right? But this trade happened in just, I think it happened in just 1 hour. This was 205. This was 255. So it happened in less than an hour, and I made $3,500. Why? Because I fully understood this skill. So this is basically how we make money in the forex market. I just decided to show you guys this, a visual representation so that you can see it for yourself how we make money from the markets. Let's go back to the main video.
Trading is a very lucrative business. It has turned not just my life around, but also that of my students. We've printed millions from the markets, and if you take this business serious, you can also print millions from the markets. If you want to learn exactly how I make money from the forex markets, send me a Telegram DM. The link to my handle is in the description. My goal is to make as many of you that are serious forex millionaires. If I can do it, you definitely can. I love you all. See you at the top.